All right, let's go. So Bitcoin having a nice little flash to the upside and a flashy to the downside. The flashy to the downside did not take out that wick low right there. So what are we looking at? Well, with this move to the upside, we did get above the 4-year moving average. And it doesn't look great. I'll go in depth a little bit about this. Let me turn on the moving averages on the weekly just for a second. And let's get rid of the lines on the chart, as you can just simply see the moving averages. So basically when we dumped, this is on the weekly time frame, I hold a lot more weight for potential directional bias based off of the weekly time frame and the 21 exponential moving average. Now that thing did climb up and it was supporting price all until we had this dump or this drop. I wouldn't call it a dump, it was 12%. So we had a 12% down day. And now we got some good news where a favorable ruling came in against the SEC for whatever crypto in general, I guess. And so far about the ruling on the what the spot ETF or something like that. So we got a spike to the upside. However, we're still trading underneath of that 21 exponential moving average. Now on the daily, the 4-year was coming in roughly right down in here. So on the daily, you are above the 4-year moving average. So let's get that pulled up real quick for anybody that doesn't understand what I'm talking about. So the 4-year is this gray line right here. It's really similar to the 200 simple, but it's just a little bit slower than the 200 simple. This is a simple moving average. It's not an exponential. The difference between simple and exponential moving averages is easy. The simple moving averages regard all of past price action, whereas your exponential moving averages put more weight on the near term. So here it is coming through here like a support zone. And basically I said I wanted to see us get at least dailies closing back above that. But you can currently see that you're testing on the daily right now, the 200 exponential. So if support is going to hold, we want to see it hold here. We don't want to see it get back down into this area. If it does get back down into this area, we want this to hold. We do not want to see dailies closing back under this 4-year simple moving average. Back to the weekly, we got to get rid of that because I set it up for 4 years on a daily time frame. So let's turn that off and go back to the weekly, and I'll discuss this in depth with you. So as you can see, the 200 simple or exponential is holding weekly price as well. All right, so there is your 200 exponential. If you want to see the 200 simple, it's red and it's right there. You can see it's just kind of still sloped to the upside and moving higher, which, will turn ultimately if price starts closing weeklies under it. We don't want to see that happen. We want to see price kind of hold support right where it is right now. Now, we also got a big, huge pop on the same day that the S&P 500 got a big, huge pop, which was right in here. Let me get it on the right one real quick. There we go. Which was right in here. Big, strong, huge day to the upside, squeezing all kinds of shorts from that swing high, And as you can see on this, which, this is not the actual futures. It's just, I don't know what's different between this and the ES mini contracts, but you can see we took out CPI's high. All right, that's the day we got CPI data, and we've traded back all the way up to that line, and we've taken out that high, and we are pulling back slightly. I do have a short entry opened up on the futures right around in here, right in this area. So I'm going to hold that, see what happens. Yesterday I took a short as well and got this nice move to the downside, and me being greedy, as most traders typically are, I waited until I got stopped back out. Holy cow, I'm the one that's preaching to you guys all the time about taking profits when you get a move in your direction. The problem with this is I don't have enough buying power to buy 2 contracts. So basically, or sell 2 contracts. I have enough buying power to buy 2 contracts, but not sell 2 contracts. So I was just thinking that this was it, right? That's a big move to the downside. This thing is finally going to pull back for a day or 2 maybe. That's generally what I was assuming. and I'm going for the same thing today. All right. So, but I can tell you one thing, trading these futures, trying to short them has really decimated the account again. So we're probably just going to stick to options for the most part. All right. So anyways, going back to the weekly, let's get these moving averages pulled up so you can see the complete and utterly total difference between this asset and Bitcoin. As you can see on the weekly, all the major moving averages are situated exactly where they need to be. The 21 is on top of the 50, 50 on top of the 100, 100 on top of the 200. And you came down in for, it didn't quite get a retest, but it came into this support right here. All right, that support held, and the fact that the 21 exponential moving average was sitting under it, I assume that's probably why you got your bounce. This is no way indicative of bearish price action. Remember, when we break below the 21, when we break below it like we did over here, that is basically when I want to see price start heading lower. We did not quite do that. So until that happens, this asset is structured to the bullish side, but I just can't buy it up here either, right? I should have been buying from down there to begin with because, well, basically, who knows, right? No one really ever knows what price is going to do. But you can completely tell that this right here held, and now that it's held, price is moving to the upside, squeezing shorts, and they are not liking it. I was one of them on about 3 different occasions. So you see how these moving averages are structured. When we go back to Bitcoin, you can completely see that they're in shambles here. So the 100 is still above the 200, which is good. All right, we definitely want to see that, but we want the 50 to migrate up above that 100, but the 21 will migrate before the 50 will. All right, it's just because it's a weekly time frame. It takes a lot of time for it to set up. But as of right now, the moving averages are in shambles where you're literally your 50 is under your 100, your 21 is under your 100. So basically, this looks to me like if it doesn't get any kind of support and get any kind of bullish momentum to break out of this region, and when I say break out, I mean it needs to break out. We need to have 1 or 2 weekly candles that look like that, preferably to something like this, right? That's what we need to see in order for me to have any kind of bullish bias to this right now. So on the near term, seeing how we have closed weekly below the 21, not just 1, but 2. This will be the 3rd attempt to get back above it. We do not close above it. That's going to be 3 attempts to close a weekly back above the 21 exponential, and it's going to be a failure. We are going to be looking for price to roll back over. I did try to short this move to the upside, but it just went up too far, and it took out the level at which I was looking to short. So once we got above this, it went really, really fast. I waited for an hourly support. I got it. And then as we traded back up into this hourly resistance, I took a short entry with my stop setting above that wick, and I got stopped out, and then the short happened, which is usually, what happens when you get too quick to do stuff. You got to let price action form its highs and its lows. I just didn't give it enough time to form its high. But on the daily, they don't look great, right? I mean, this is the sign of an asset getting ready to roll over. And I don't have any other way of telling it to you. I mean, I wish I could look at this and be like, hey, guess what? We're up above the 50. The moving averages are structured nice and bullish like they were over here, right? This is when the moving averages were structured bullish. But slowly over time, we have dropped below, and we are now back above the 200. We just need this thing to hold here. Now, if the S&P has a couple-day pullback, which I'm not certain it will, obviously, I don't know if it's going to pull back or not. Let's see what it's doing. It's pulling back so far, but really and truly, you would have to pull back. Let's see here. Right here, 1,800 hours, that's going to be your open. So typically, you're trading at the open right now. Because remember, futures contracts trade 24/5. So this blue candle right here, that's your opening candle. So that's where you're trading right now. Can it find support here? Yes, it can. It absolutely can. We will see what happens. We don't care about moving averages intraday, so let's get rid of them. But yeah, we'll see what happens. But if this continues to have a pullback day and get down around, I don't know, say this low, which, was not quite yesterday's low, but it got down too close to where it had opened, right? And here is the open. So it drops down to its open and then comes back. This will be yesterday's low, but you do now have a major swing low down there. I'm not suggesting that it can get down there today. What I'm suggesting is it could take, a day or two. Now, excuse me, as far as data is concerned, all right. So all week this week, the U.S. has been inundated with terrible numbers. So we had note auctions also happening all week. You can see the 2-year, 5-year note action there, and then the 7-year note action. That's pretty much the reason why I think price has been so bullish, because your consumer confidence is down. Your JOLTS data was bad. That's bad. GDP's bad, came in 3 ticks or 0.3% lower than what was expected. Not good there. You got pending home sales, which was up slightly. That's good. Crude oil inventory is good because I have a long crude oil trade open, and it's literally the only trade right now I think that I have that's in profitability. And then, yeah, that. And here we are, core PCE. We went higher. So this is the number that the Fed was talking about at Jackson Hole. I did a video last Saturday talking about the main points that he made in his speech, the main important stuff, right? We went over that, and basically they were wanting to see this tick lower, right? They were expecting 4.2. We got 4.2, but what I'm trying to tell you is it's higher than last month's number. So it's not going down. It's extremely sticky. And this number right here is the only reason the S&P is pulling back right now, because the S&P was moving up. There were so many reasons why I heard this week. It's not even funny. It was based on the 7-year, the 2-year, the 5-year notes and blah, blah, blah. Other people were saying basically the Fed is going to have to pause, which if you pull up the Fed tool, it'll show you that there is like a 70-something% chance that they're not going to do anything this September. So let's see here. Yeah, 88.5% chance they're not going to do anything. All right, they're not going to do anything, so that's that. Now, tomorrow, we get non-farm payrolls, average hourly earnings, unemployment rate. There's a lot of huge data that's coming out tomorrow as well. Initial jobless claims came in better. This number, whenever it's a lower tick than expected or than last month, it's better, all right, because that's less jobless claims, less unemployment claims, if you will. So that's good. PCE was not good. PCE wasn't terrible, but it was not good. All right, so all week long we've had not good data, but somehow this thing is just simply rocking and rolling. And the only thing that I can basically come up with is the structure on the weekly time frame. It was bullish. We had a 3-week pullback. That's bullish. That's very nice. We had a lot of dollar weakness, which contributed to that massive run up. Here you go. There's your dollar weakness for 2 days. But you can see we're having a pretty nice day today. So let's go look at the weekly on the dollar. Let's get this going here, and let's see what it looks like structurally. Oh my God. The dollar structurally on the weekly looks just like a pullback. You had 1, 2, 3, 4, 5, 6 weeks of upside on the dollar. Having a week or two of downside is normal, right? But look what you got here. You got the 21 and the 50 setting right under price. So if this holds and then we end up getting a few more weeks of upside, the 21 is going to creep above that 50, and you are going to have a complete and total bullish structure on the US dollar. All right. We were bearish for the majority of the year. This is being the reason, right? This is the reason, price action. But when this rejection happened, this is a big move to the downside. Look at that weekly candle. That is the very definition of a breakdown, and also making trend continuation, and then instantly rejected and went straight back to the top side of the descending wedge formation and broke out of it, I might add. right? Now, you were stifled at weekly resistance, and you have another area up here. So basically right now you're trading just a little bit above the yearly opening range, but this structure on the moving averages is good for bullish continuation on the DXY. Will it continue to go up? Nobody knows, but if I was a betting man, I would be looking to buy dollar positions, okay? I'd be looking for long dollar positions. Maybe not this week. Maybe wait for next week, see what kind of a pullback we get. Wait for those job numbers tomorrow. They're going to be vitally important moving forward, as if, we have a rise in unemployment. That's going to be good for the Fed. So we already know the Fed's going to probably pause. We don't know how long. Is it for one session? Is it for two sessions? We don't know. But one thing that we do know, the street knows and the Fed knows, is they are not cutting rates. Not this year. Something tragic would have to happen before the Fed starts cutting rates. And that tragic thing hasn't happened yet. It started to when we lost 3 banks, right, in the USA, but we have 4,500. 3 out of 4,500 is not a crisis. It isn't good, but it's not a crisis. And let's be honest, 2 of those banks were the biggest crypto banks in America. So, yeah, I'm not going to get into that. Conspiracy theories, go ahead, but I'm just saying. 2 of those banks were the biggest crypto banks in America, and both of those were shut down. So, collapse, crisis, maybe not. But right now, the dollar is moving to the upside. This week, it's had a pullback. That's why you're seeing such a big move on the S&P 500. So hopefully with this dollar pullback, we'll see the S&P 500 pull back to an area where we could potentially look to be a buyer. Where would that area be? Well, I don't know. Let's see here. If we could pull back to 44.67, which is not the actual ES number. I don't know why these things don't have the same numbers. Here, let's pull up another tab and I'll show you. Let me just go with this real quick. Let's go to the daily and let's get our ES1. Now, my data is going to be 15 minutes lagging. It's not really much. It doesn't matter as far as the daily is concerned. But here is CPI high right there. 45, 44, 75. Now, this is the E-mini futures. This is what I look at, right? This is what I'm trading, essentially. So these are the numbers that matter. You can see you did not take out that high, that CPI high. But on this, you did. So the CPI high on the SPX 500, this is a CFD product is what this is, okay, guys? This is for people who are allowed to trade CFDs like gold, silver, and oil the same way that you could trade Forex. The SPX 500 USD is that. It's the same thing. It's CFD product. So basically, there is actually no price action that is happening inside of this. You're just giving your money to the broker, and they're not actually depositing it to this asset. Market makers are just keeping it situated. But that high is 45.29. 45.29. Over here, we got 45.44. So a little bit of discrepancy there in price. The market just opened. The S&P 500 did get bearish there for just a little bit. It did turn bearish. Now it's retesting the open. So we'll see if that was just a retest of the open, and do we continue to climb for the rest of the day. If that is the case, I will close down my short 46.65 call, because that call and a bunch of other trades that I had open just were massive losses. Like I lost $100 and something on Chewy. I had a pretty big loss in Walgreens. I'm losing big in this, like a couple $100. So yeah, the P&L is not looking really good right now. What I was expecting is when we had the bullish day, when I sold the call, I was assuming that price was going to roll over right here, just like other people were, right? Because you had this move to the upside. CPI wasn't great. And then boom, remember the headline CPI number went up by 0.2%. We went from 3% headline number to 3.2%. All right. And core inflation didn't budge hardly either. It went down 1/10%. So CPI was not good. So we had a down move coming from that. I thought this was just a pullback into the Heath level right there, which is just known as supply, and then a big nice dump. So when we had this day right in here, boom, sell a call at 46.40, and then boom, boom, boom. So these 3 days literally killing that position. So we shall see, right? And I took another trade yesterday based on the fact that Palantir has been bullish for a couple days. And this stock is extremely shorted. It's short heavy, right? There's a lot of people that are short this. So I was I bought a spread. I bought a $17 strike and I sold a $19 strike for a $2 wide spread. Max profit being roughly around, I think I paid 70 cents for it. So it'd be like 130. And the max loss on that trade is $51. So it's a good 2-to-1 risk to reward, but I need Palantir, not Peloton, Palantir to get up above $19. And with the short float, I figured that could happen. What happened today? Why is it down? Well, we got a nice, beautiful downgrade by, who was it? Morgan freaking Stanley. Morgan Stanley comes out, downgrades Palantir, and that's because they are probably the majority of the short float. Don't you love it? Wouldn't you love it? Just be Morgan Stanley and already have your guys' position yesterday at the market close. Just go in, $1 billion deep short, and then come out the next day and say, oh, we're downgrading it. Oh, love it. Gotta love it. You gap down, and now you're heading down. So that trade's gonna probably lose, but it's open for a while. It has plenty of time on it. So when you open options trades like that, it gives you time, right? That's basically what you're paying for. You're paying for the time to set in it and wait. And like I said, it could go all the way to zero, and the most I can lose is $50. All right, so I know I'm flying this thing around. I'm going pretty fast, but the reason is simple. I don't want these live streams to be 4 hours long because people do not watch them, and they do not get served out by the algorithm. So yeah, so we're going to try to keep them short. We're going to try to keep them steady. My main Bitcoin analysis, it's bearish. I mean, it's bearish on the near term, and it's bearish on the long weekly term as well, right? You're under the 50 on the daily. You need to hold this 21 exponential right here. You need to hold this 200 exponential. If this is going to be an opportunity to get long, you could look to do so at yesterday's low. This candle right there. So once price gets underneath that, you could potentially look to get long. All right. Now, make sure you trade accordingly. Don't look at this as it's going to hit that, and then you're going to get one of those big, lovely candles that everybody want. You know what I mean? A big, gigantic candle going up to like $400 million. Yeah, no, we're not looking for that. We're just looking to see if it can hold itself here. This is a crucial support, but it's a monthly support. We got 10 hours left on the monthly candle. 10 hours. This thing needs to close above 27.223, as that is monthly support. A close above that would be fan-freaking-tastic if it can do it tonight, because that means monthly support held, even though we got this nasty move to the downside. Let's go to the monthly. You can say it held. So there it is, right? Monthly doesn't look good either. Monthly is in control of the bears. It's that way across the board, guys. Weekly, this is a short setup if I've ever seen one. The problem is I want the freaking highs. I don't want to short the middle of the range. The reason I don't want to short the middle of the range is because we can get a lot of sideways choppy price action like that from here all the way to there. So you just put all of this right here inside of that range. That's what can happen. So I do not like shorting the middle of the range. I like shorting the top of the range or buying the bottom of the range. That's how you're supposed to do it, right? This has been support literally for the last 3 weeks. So for the last 3 weeks that I've been live and have done videos, I have said, if you want to be a buyer, buy it at support right there. It's as clear as I can get. But you can see right now where you currently are trading. This goes by the close. The close is under monthly support right now. Well, it's not the close yet, but where price is trading is under the monthly support. If it holds there and closes there tonight, I will look for a retest of this area tomorrow for a short entry on Bitcoin. But I was wanting to buy intraday support, hoping that 200 exponential on the daily time frame can hold, right? So you do have an intraday support roughly right in there. Let's go ahead and put a line up there so I can give you the exact price. That price, 27,110. 27,110. That area holds good, but 27.15 and 27.110, those are the two areas that you could look to be a buyer. And that's like your last ditch effort, right? Because if Bitcoin closes the daily underneath the 200 exponential and all the other exponentials, there's only one way this thing can go, and that's down. And this structure right here is bearish. It wasn't when it was up here. It is down here. Unfortunately, that's just the reality of it, the subject. All right. The 400 or the 4-year moving average is coming and clocking in right around there. Now I got too many lines on the screen. 26,627. So I guess as long as you maintain that area and then bounce, I'll like it a lot more. But if it doesn't bounce from here or here, then you're probably going to be seeing lower prices. How low? Well, I can guarantee you take out this low right here, 24,713. Now, for those of you that hold a lot of Bitcoin, that's a lot. That's a pretty big loss, right? Per Bitcoin, $4,000. I do not like to wake up in the morning and see my account down $4,000 per Bitcoin. Trust me. Don't like it. I like to see it up. So we definitely need it to go up. If we take out that $24,000 level, I will probably cut my bags in half. Probably should cut my bags in half right here, to be honest with you. Right here where we currently are. Seeing how we are structured bearish on the weekly and the daily time frame. But yeah, it's got a hold right here. Where are you getting that open bell from, Trade Talk? That is coming from this platform right here, my friend. Right here. When the market opens, this platform goes ding, 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 ding. It does also on tastytrade as well. I don't know if you can change the sounds on this, but I know you can change the sounds on tastytrade. So you can make it sound like a baseball game organ, like the start of a baseball game, that little tune. You can make it sound like a lot of different things. When you get filled on an order, instead of it going bling, you can make it sound like a cash register. Yeah. How's it go again? Bling. All right, so we got Tesla moving up. Chewy was doing good, but I'm out of this position. I had already lost on it, and this right here was making me very, very much disgusted. But however, looking at it today, I'm very glad that I got out of that position. All right. This is Royal Cruise Line, Royal Caribbean. I don't know why I have this on the chart, to be honest with you. This might be a buy. Let's go look at it. RCL. No, let's go. Let's do it here. No, let's do it here because this data is 15 minutes lagged. So let's go here. Let's go see. Let's get our trusty moving averages up. If you don't know how to read moving averages or whatever, I can teach you how to read them. They're very simple to interpret, but interpretation is very much important. So you can see here, this asset is structured bullishly. You're testing the 50 right now, which is typical in a bull market. All right. A test on the daily time frame to the 50 is typical. We absolutely look for closes below, and then we look for bull traps or bear traps. You got one right there. Look how the very next day traded lower, took out all those lows, and then moved to the upside. However, there is resistance up there in the form of the 21 exponential, and that daily candle right there, 102.41. However, if you do want to buy Royal Caribbean because you think the economy is going to be fine and people are going to be booking cruises and stuff, which I think they are. Obviously, they are because, yeah, this thing is up big on the year. Right in here is your yearly opening range. Right there. In fact, that is your yearly open for this. And that was at $50. Where is it trading now? 102. So 100% gain on that. 100%. Sitting at 97% right now, but that's not bad on a portfolio. And if you guys are new, if you haven't been here before, I was telling people to buy down there, right? Because we were looking for the bull market to come back, or at least to pop to the upside. And the yearly opening range is typically a good area to start to look for longs. And boom, if you would have bought there on the yearly opening range, you would have lost on that one day and that one day only, because the next day you would have been up good, and every day after that. Fantastic stuff. And it's really that simple. But this is structured bullishly on the daily, uber bullish on the weekly. So I can't buy it, right? It's just too high. Like, I would rather see it pull back down to the 21, but by that time it might make it look bearish on the daily. So I'd like to get the weekly and the daily 21 closer, I guess, to near term price, and then maybe take our shot then. But it does look like weekly support is currently holding. This is going to be weekly support on RCL, Royal Caribbean. I've been on a cruise before. It was absolutely fantastic. Had a lot of fun. A lot of fun. It was a 7-day cruise. We went all over the Bahamas, and it was great. Very, very great. We went and seen the Virgin Islands, St. Croix, stuff like that. Fantastic time. Drank the best rum punch I've ever had in my life. All right. So what's up? Good morning, everybody. Good morning. Good morning. Good morning. Let's go. Let's go. Good morning. Yo, yo, yo. What's up, traders? What's up, my friend? Will Smith says, face, tiger, 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 tiger. Hey, don't be slapping nobody in here, Will. We don't like that, all right? We got to be good in here. Good afternoon, team, says Michelle. What's up, Brandon? Crypto Trades and Tech. If y'all don't know his channel, go give him a check out. He does really good stuff, and he knows a lot about crypto projects, like specific crypto projects. He reads white papers and stuff. Go give him a subscribe. After all the hurricane destruction in Florida, Georgia, how much more money will they send to the Ukraine? That is a political question, Stymie, and we do not get political here. We are all about trading. But that's a good question. That's a very good question. I don't know what's going on over there. I have no idea why anything's going on. There's conspiracy theories. I've heard a lot about this, that, but Florida's fine. Florida is not the richest state in the country, but it's one of the richest states in the country because we have a lot of people come down here for vacation and stuff. So I'm pretty sure it'll be fine. And it was not a Cat 4 when it hit either, which is good, right? Which is good. I just got a little bit of rain and a little bit of wind, no more wind than usual, with a couple gusts that made it go whoo in the windows, but that was it. Nothing major, nothing. But I'm on the East Coast, so I was sheltered, if you will. Loud bell for my earphones. Geez, yeah, I can't control the sound of that. I guess I can, but if I do, then you won't be able to hear my mic. See, if I go down like that, yeah, you can see it definitely does good for the bell sound, but not my mic. So maybe next time I will try my best to mute that bell for you. I am apologizing. Can you look at CLOU for a potential short or general thoughts? CLOU. I don't know what this is. Cloud computing. I remember when cloud computing was uber bullish, but I don't know if I would short it. On the weekly, you've almost got yourself into a bullish breakout pattern here. So if I do give you these resistance levels right there, we're going to use that resistance at $20.71 because this resistance was a trap. It was a bullish breakout. The very next week, took out the high, took out the low, closed below the low. That is a bearish engulfing. So I can understand the reason why you would want to be looking to get short here, considering the fact that the 200 exponential moving average is setting right at price. However, if you look at the 100, 21, and the 55, they are all under price. The 21 is the best guideline to go for on the weekly, in my opinion. Like, I very rarely look at all the moving averages, but the only reason we're doing it today is because I just wanted to show you the actual structure of Bitcoin, right? And the S&P 500, the difference between the two. So this does look like a breakdown, and it did break down below support. So yeah, I mean, if these moving averages were setting up here, I would definitely be like, yep, I'll take this short with you. And then I'd pull up my platform and look and see if they got options and then hit it and buy some puts. But I won't, because this is it. Like, you got that as resistance and this as resistance. So if this holds, you got a Heath level right there or a supply zone. So $20.50, 21 or $20.71. This is a strong week. Maybe next week it pulls back. Let's look at, yeah, I mean, you're just gapping up, gapping up, gapping up. You gap up, higher close, gap up, higher close, gap up. Well, you gap down here, but higher close, gapped up, closed gap, higher close. Well, you're not closed yet today, so we'll see how it works. But if you wanted to get short, my friend, I would tell you to do it here. But here on the daily, you can see that you are out of the bearish zone. When the RSI is under the 50, the bears have control of the asset. When the RSI is above the 50, the bulls have control. The RSI is above the 50, and it's because of this big move right here. This is a short squeeze. I can go get you some short data. Let's go see how many shares are short out there. Let's go look at the float. So basically, if this thing is breaking out due to a short squeeze, then I would want to see this number right here that it's not showing me. I'd like to see that number above 15%. What's wrong? Well, I can't get it for you because it doesn't have it. Maybe Yahoo Finance has it. You're looking for a short float ratio, or just shares short the float percentage. Anything over 17%, then you definitely don't want to short it, because it is in bullish breakout mode, right? And it's structured bullish. If anything, I would let resistance pull this thing back to an area of potential support and look for long again. But yeah, it doesn't look like a short to me. Not to me, not the way that I trade. But if these two levels hold, one or the other, then yeah, I mean, I don't see why you can't short it for a day trade. It's cheap enough at $20 a share. You could buy a few hundred shares of it, or short a few hundred shares of it. But I don't love the short trade. All right, I'm just gonna go ahead and tell you. I wouldn't be surprised to see this thing in the next 5 or 6 weeks be trading up here. I know that sounds crazy, but 5 or 6 weeks is a long time. Remember what I said on oil. All right, remember what I said on oil. Hang on one second. Let me get this back over here. So I got to watch this because I'm in a short right now on the ES mini micro contracts. All right, so let's go look at oil. There it goes. Right, we were looking for a short right here because it tested old support, broke down. The 21 was above price, looking good. So I got short on a retest of 79.24, and then the next day woke up. Now I had a chance to take some profits when it was down here, but I went ahead, closed the short out, waited for this area to get long, and got long, simply because it was breaking out above the 21. Now, last Sunday, beautiful. Let's see if we can do this. Give me 1 second here. I'm going to try the 5 minute. All right, so where you at? Where you at? All right, so Sunday when we were doing the live stream, this is what we had. And going to the 5-minute time frame. You can look at this, how it's been crazy and wonky. I literally said I wouldn't be surprised if this thing traded up and had a big move back down and then broke out, right? Like, I think I even drew a line, something like this, right? That's what I was looking for to happen on oil. And if we just go back to the daily, well, I need my arrow cursor to do that. Go back to the daily and get rid of this. That's exactly what's happened, right? So back into the 5-minute. Down in here is where we were. Remember, I just showed you we were down here. I wouldn't be surprised if we didn't chop around there and then take off. I mean, it did it exactly that way. This is the best position that I have on right now. It's literally the only reason the P&L is even in profits right now. That's how bad it is. But I'll fix it. I always will. Always do. Yeah. What's up, Heat? Everyone in the chat, thoughts on Apple? Apple it did have a nice breakdown, and people thought that maybe Apple was going to pull the S&P 500 down and the bear market was going to start again, but here you are. I would assume, man, that you're going to fill that gap just because you're all the way up there, right? Like the advanced decline line, let's see where the advanced decline line is. On the S&P 100. Yeah, it's 70-30. So I should just close my short position. So you got 70 stocks that are advancing. That means 70 stocks are going up. And then you got 31 stocks that are declining. That means you got 31 stocks that are going down. Typically, when you want to look for shorts on the S&P 500 or the S&P whatever, you generally want to see the opposite, right? You want to see 80 or 90 stocks declining with 10 advancing. That's generally when we want to look for shorts, not really when the ADD line looks like this. And it looks really good. So I would not be surprised at all if that trade that I'm in does not get stopped out. Right? It has been bullish for days. That is one hell of a bullish candle there, right? So that's last month's low. You got back above that. It just looks, I mean, I wouldn't buy it up here, obviously, because you're buying a very extended bullish move, but you haven't hit overbought yet. So, I mean, this thing can keep going up. It can keep going up. It can definitely go back up to overbought. For sure. It hit oversold and boom, people just bought it. All right. People started accumulating right through there. Up it went. Blast off. So yeah, I mean, when your advanced decline line is uber bullish, most of the stocks will be moving to the upside. All right. 50-day or 50-week do you look at? I look at whatever. Okay, so I have this indicator. I'll show you right here. It is this right here. Spectrolight is the dude that makes it. All right. Right here. This EMA-MA combo. This gives me 4 EMAs and 3 MAs. Now, I don't look at the EMAs very often, but I put them at 21, 55, 100, and 200. I think those are the default settings. If they are default settings, just leave them at default. Change the colors however you want them to be. But it depends. If you're looking at that move at those moving averages on the daily time frame, then it's going to be the daily, right? If I go over to the weekly and I'm looking at the same 55, it's going to be different because now it's looking back 55 periods. So the 21 EMA, all that is it's a look back for 3 weeks. It's a 3-week look back. So that's the average of price 3 weeks past, if you will. All right. So it's if whatever time frame you're on, it's going to be that. If you're on the weekly and you're looking at the 21, then it's going to be a 21-week look back period, not a day, a week. But I do have a 200-week right here, and it's only a 200 weekly, no matter what time frame I'm on. but it looks jagged like that. And if you go intraday, it looks even worse. It looks like this. Clonk, 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 right? So, yeah. If you download that or if you use that indicator, it's right here, the EMA combo, whatever you're on, whatever time frame you are on, these moving averages, exponential moving averages will be looking back for that time. Right now, the 21 is 21 4-hour candles. So, and it's just a mean, it's just an average, right? But when they're structured like that, it looks good. I mean, on the 4-hour, Apple looks like it does on the 4-hour. But the 21 is about to breach on the 4-hour, breach the 50, meaning get back above it, and then you will be completely bullishly structured on that as well. I am going to do a video on moving averages. I know a lot of people probably won't watch it, but if you should, because I'm going to talk about how you can use them to basically help you, you know what I mean, in your trading. All you got to do is plop on 4 moving averages and it'll tell you right away if it's structured bullish or bearish. Algos trade off of them and all that good jazz. So basically right now the S&P 500 just literally went down to its daily open and bounced. So there you are. Traded right down to the open and bounced. Up there, that's PMIs, came back down, boom, all the way back up. This thing is bullish. It is in the midst of a short squeeze, so trying to short this is futile. Absolutely futile. Yeah. All right. That's cool. Thank you. 50 or 50. Yeah, answer that. Good morning. Me too. Which with NCL, Norwegian Cruise Line from Miami to Bahamas. Yeah, they're fun. Good afternoon. Just love this channel. Thank you, V-Trade, so much. I appreciate it. Come on, let's smash the like for the YouTube biz for the boss. I appreciate that as well. Would you rather go on a cruise or go bike packing or backpacking through the U.S.? I don't like to walk, so probably cruise for me. Yeah, cruise. All right, I got to close this position. Got to close this position here. Give me 1 second. At the very least, set a stop loss. 45, 37, 75. 45, what was it? 45, 37, 75. 45, 37, 75. Stop market, buy to close, preview, like it, send it. Boom. All right. So now that trade is protected. Yeah, I'd much rather go on a cruise than ride a bike or backpacking. I mean, I'm just joking. I don't mind walking, but I'm not walking across the entire United States of America. I'd rather drive across it and then get out of the car and walk around and look at cool stuff. Right? Yeah, I'm not much of a athletic person these days. I was in my 30s, but as soon as I hit 38, 39, 40, I gained a lot of weight. But I have thyroid issues and other things, so. But I'm not using that as an excuse. I'm also a very lazy punk. Which is 99.9%. I spend a lot of time looking at the charts, man. I'm in my office from the time the market opens to the time the market closes. And if I'm not in my office, if I have something else to do, then I go do that. But if I don't have anything to do, no doctor's appointments, no nothing, I'm in my office. Whether I'm talking or reacting on Twitter or in the Discord, I'm watching charts. I'm looking for trade setups constantly, daily, every single day. Looking for those trade setups. All day long. If the S&P 500 goes up, that could be good for Mr. Bitcoin. Not good for BitBoy. BitBoy is done. How in the hell do you get fired from your own YouTube channel that you created? That is weird, dude. I guess he got so many subscribers and so many people to pay for courses and other things that it became a company with like shareholders. They like gave him the boot. Oh my gosh, how do you get kicked off your own YouTube channel? So somebody else is going to take over BitBoy's YouTube channel? That's funny to me. It's so freaking funny. Why don't you do something? Heck, why don't you trade crypto, right? Instead of be like that. Why would you want to grow so massive where you have to hire people? Just trade. Just trade. That's all you got to do. All right, Bitcoin's not looking so good here. We did get that, like I said earlier, that little spike to the upside was instantly hit back down. Guys, I hate to say it, but this was a nice candle. I love to see it, even though I was trying to short it and lost money on the short. I have a lot of Bitcoin, so I definitely don't like to see it lowering in price because my overall equity goes down with it, right? Like, I have a lot of Bitcoin. I need to take half of it at least, I'm thinking, because it just doesn't look good to me. It needs to hold this. This needs to hold as support. Like, it needs it. That 200, that's the exponential. That's the average from 200 days back. So you need to hold that, because once you lose the 200 on a daily, you can't imagine how many algos flip to the sell side. Just get me out of it. Because if you use if you use moving averages, like just literally use moving averages as your investment strategy on the weekly, you would be amazed of how much money that you can make, right? How much money that you can make. I mean, it's insane. All right, so like here's the bear market of 08, right? As soon as you started closing weeklies above, that's your buy. You just buy it. Boop. Right? You just buy it and you hold it. You just hold it, right? Once you get this, that's good. Now, if you get back under the 21 and then these moving averages still look like this, that means you're probably going to see price roll back over. But if price has broken out, retested, and got back above it, I mean, you're buying at $864. All right. And then once your moving average gets situated like that, with, the 200 being on the bottom, perfect. So when do you sell? You can sell when your 21 breaks below your 100. All right. So if you bought at 867, it almost happened there, but didn't. You would have sold right here. So you'd have bought it at $865 using that simple strategy. You buy once the weekly gets back above the 200. I mean, the 21. Sorry. The 21. You buy it and you hold it until you start closing multiple weeks under the 21. Then you bail. But if price continues to move up and the moving averages situate themselves to be bullish, wait till the 21 crosses the 100 and then you sell. So, and then you wait again for, price to get itself restructured. You bought back in at 40, 45 roughly. There's many different ways that you can use them for buying and selling for long-term holds, right? You can make it however you want to make it. I'm just trying to explain to you that they do work. We use them constantly for day trades and longer-term trades. So like, when I'm looking at the weekly, that's like my more macro view, if you will, right? So if we're consistently closing weekly candles under the 21 exponential, then I'm bearish the asset. All right, it's as simple as that. I have a long-term macro bearish bias on the asset. Now that doesn't mean I can't take bullish positions intraday, right? Intraday, because the intraday moving averages are much quicker. So like, when you lost the 21 here, when it rolled over right there and dumped, any retest of that support zone into that 21 would have been a selling opportunity. What support am I talking about? Right there. Right there. So we would have been watching this. We would have seen this. And then we would have seen this. And then on this day, we probably would have been like, let's wait and see if it takes out yesterday's high and then get short. And take profits that stop to break even. And that would have had you in the short at 46.72. And you could have gotten all the way, you could have gotten to the lows. I mean, there was no reason to exit As long as your 50 is maintaining resistance, there's no reason to get out of that short. It's as simple as that. If you're choppy, moving averages is not going to help you, because choppy price will move in and out, in and out, in and out. Above, below, above, below, above, below. You know what I'm saying? It's not going to help. So I'm just talking about longer term things. But for day trading, I use the 21 exponential. If price gets under it, then I look for near term shorts. But that can hurt you, right? It definitely can hurt you. All you got to do is go right here and see how, right? Right through there, looking for bearish entries. Right through here, no. Here, yes, right? We didn't have any level to short right there. So I waited on this one, and I got killed, all right? So why am I short today? Because we took out the CPI's high. That's it. That's the only reason. I was looking for a pullback, a deeper correction than what we got. This is a very small range candle, all right? I want to see this thing get down into at least yesterday's midpoint. Then I'll take that trade off. Or I'll get stopped out, one of the two, right? One of the two. It'll either go down or I'll get stopped out. Hopefully it goes down. Hopefully it goes down. I mean, not hopefully. Hope isn't a strategy, obviously. I'm just saying, right? Everybody always wants their trade to work, no matter when they take it, no matter what asset they take it on. When you take a trade, you go into it wanting to make money. That's just human nature. I've just been through so many trades, it doesn't really matter to me if it works or doesn't. My risk is situated. It is situated, so I'm good to go. But yeah. I hear you're around 35, 40 years old. I hit a wall of physical change decline. Well, I'm sorry to hear that. Suddenly needed more sleep, and an old man medical thing showed up. Yeah, sorry to hear that, man. Yeah, I'm not going through very good stuff either. Not going through very healthy stuff either. I could help myself by doing more exercise. I got a freaking treadmill sitting right on the other side of my desk, and I don't use it. Pathetic. I will start using it though. Industry of Magic, please explain that the 2100 cross thing again. I didn't get it. All right, the 21, it's just the 21 exponential. All right, here, I'll pull up this and the inputs. So 21, 55, 100, 200. So on the daily, if price is trending above the 21 right here, the yellow line, right, then you look typically to be bullish, right? About the times when you get under the 21, you can look to be bearish. But if the rest of your moving averages are situated like this, then you don't, right? Here would have been like, this would have been a difficult call, one I probably would not have made, because the 200 and 100 were like physically about to cross. So I mean, it's just like I said, I'll make a video and I'll explain it all in depth, how you can use them, how easy it is, one indicator or two. I also use the RSI, and that's literally it. I use moving averages, the RSI, and then price levels themselves. I use price levels as resistance. I don't find some random area where prices tag the line 15 or 20 times and call that resistance. Like some people would say, this right through here is resistance because it held here, and it held here. And then they'll go Alt H, and there's resistance. Well, I got a problem with that. A, it's not resistance, and B, like, okay, how do you trade that? Or you wait for it to get above. You mean like where it did there? I mean, that's going to happen no matter what resistance you use. But if you use actual, like, highest bullish closes, you can see right there was a beautiful short entry, right? Wait for it to tag resistance and then down. I'm simply locked on to this bullish candle's close. It's the highest bullish close. That is resistance. until you get a higher bullish close, which you did right there. But then it immediately dropped again, right? This is that chop I was talking about earlier. When you're in market chop, you typically wait until you either A, break out or break down. Or buy the lows, right? You can buy lows, 50 test on the daily, 50 tests. You can buy those. They won't always work. Obviously, nothing in trading works 100% of the time. But there's a myriad of different ways that you can use moving averages. You can use them for secular trend growth, like we're seeing right now on the S&P 500. Like every bear in the world was calling this a bear market bounce. Some still are calling this a bear market bounce. I mean, you're within 5% of making new fresh all-time highs. How can you, where you were, how can you call that a bear market bounce, bro? And look at your moving averages. These things are structured. These things go back as far as time will let them go, right? And they are tried, true, tested, my man. Once you get the moving average situated, that 100 cross against that 200 cross right there, that's all it wrote for the S&P 500. That's it. I mean, it traded sideways for maybe 2 or 3 weeks right here. But like I said, you buy the 50 test right in through there. As long as the 100 is above the 200. As long as the 50 is above the 100 and yada, yada, right? Then what you want is you want to see that expansion, that secular trend, the return of the secular trend. Now, if you're looking for secular trends, then I suggest you look at the weekly. This right here is another reason why I never was excruciatingly bearish like everybody else, right? Pretty much said the lows were in, right in here, right? Now, are they in? That's a bold statement to make. I think they are, honestly. I do. I mean, all I got to do is get to right there. We'll have a new year and I'll be right. The lows were in for 2021. But at the same time, this is bullish. This barely got bearish. Like you broke below the 100 there. Next step for this is to break below the 200. If that does that, then price is going lower. Price has to go lower before that will happen because these are lagging indicators. All right. They calculate themselves at the end of the day, at the close. That's where you get your final stop. But they operate the same. Like they look the same this day as they do now, right? On this day, right here. They looked exactly the same as they do right now on this day. Of course, now they've splayed out wider and wider, which is good. The wider they get from each other means that you're probably getting ready to enter into a secular trend. What is a secular trend? This is a secular trend, right? Many years of just straight up. 2009, that's when the Fed literally basically backstopped the market and started quantitative easing. Right? They started adding liquidity and dropped interest rates to nothing, and the market loved that, and that's basically why we got that pump. But they had to do it, or this thing would have been ugly. Ugly. I hate using that because it doesn't even show that, it just barely shows the 01 crash. So like here, right? Once your moving averages got structured, here's your 200, 100 cross. 50's above, 100's above. You want to buy on pullbacks. Where's a good area to be a buyer? Well, the 50 test on the weekly. This one went all the way to the 100, but still, I mean, you were good until the great financial crisis happened, which literally barely took out the all-time highs and then rolled over. But that's different. But if you look at secular trend growth, I mean, if you go back in history, these moving averages will show you when something is bullish. It doesn't mean it will stay bullish, but, you know, it does pretty good. I mean, go back as far as you want. Right here, huge crash, right? bear market. This is what I was talking about. We didn't even get to this point right here in the 2022 bear market. We never even had the 21 cross the 200. And people were so bearish, right? So bearish. And this only took 1, 2, 3 weeks before you would have known, well, shoot, this was a trap. Darn it. So let's get bearish. And then you're bearish. 21 gets back above, then you got to be careful because you could be doing a trend change, right? 3 weeks, then the next week close back under, next week close back up. All right? Look for buying opportunities and then see what happens. You want to slowly see price start to creep higher and higher and higher until you get to this point right here where the 200 crosses back above the 100, and then it's almost sayonara. See, here's a time where you did get that cross and you didn't have a secular bull market through the 70s, 76, 77, right? The oil embargo. Yeah, so you did actually drop back and look like you were going back into bear market territory, and then you got back above. So this is what I'm talking about. This is choppy price. Literally from like this high to this low. That's all chop, right? And moving averages don't really help you if you're in a choppy sideways environment. But once price does ultimately break out, notice here that you got under the 200, but just for a couple weeks, and then you were right back, right? So you can't get too bearish just because you get one weekly breakdown. You got to wait. Like right through here, you had that 200 above the weekly closes for multiple weeks. So yeah, people were shorting this, and then it broke out. Came right back down, tested resistance, up she goes. Down for a 100 test, up it goes. Down for a 100 test, up it goes. Then you got a deeper correction there, but like I said, there was other stuff going on in that time. But still, yeah, I mean, using moving averages, you still would have been able to capture some of the bullish growth. You would have exited here. So roughly anywhere in this bullish candle, and then waited for this. Once you got over here, your yellow is like blasting through all of them. 55 is getting back above the 100. 200 is still in its rightful place as the underside. And that's a secular trend. It's a secular trend, right? But that's the past. So basically, when this happened, I said that this could be like one of the greatest opportunities to invest in the stock market. If you haven't up until this point, start thinking about doing it now, because we got a 20% correction on the S&P 500, deeper than that. So some of your favorite stocks dropped 50, 60, 70. Netflix dropped 80%, 27% correction. Netflix dropped 80 freaking percent. Netflix makes money, right? They make money. They make money. That was a huge drop off. 76%. Yeah, I was telling people to buy it down in here. Netflix will go back up. I don't know if it'll go up and make all-time highs, but you'll make money nevertheless. If you would have just bought anywhere in here, say, like at weekly support, you would be up 93% on the account. Not bad. Not bad, right? So yeah, we got not good news today. We got not good news all week, but the S&P 500 is just rocking and rolling. This is the only thing that I can say about this is it's just a short squeeze. So we'll wait for a pullback and then we'll look to get long. We can't buy highs. Some people do, and some people make money doing it, but not many, right? I don't know many breakout traders that make money. I know a couple, but not many. Because a lot of times you get your breakdown, like here, for instance, and then price reverts back to the mean. Price usually does that. So stopped out. S&P 500 looking to take out the daily high. It's a very tight range. Yesterday was a very small range as well. So it's just probably going to be a sideways choppy day, guys. Bitcoin's dropping. Like I said, wait for that low to get taken out and then make sure it holds. What I mean by that is you want the low to go and then you want it to get back above it and hold above it and then start creeping back to the upside intraday. So like you almost got there. And also one last hint on the moving averages and then I'll stop. Don't use them on any other time frame but the daily and the weekly. That's it. Just the daily time frames, weekly time frames. That's it. Hardly anybody that's in this game has enough patience to even use the weekly chart. Right? So just, yeah. So if what we want to see here, which might not happen because like I said, the S&P 500 is looking to take out the daily high. So you might not get a run below the low. Remember, on the daily time frame, the 200 exponential is like right through there. So I figure there's going to be some buy side activity happening here. We should have bought it on that push lower. I just was rambling my mouth too much to look. Yeah, a lot of times I get confirmations 3 to 4 different indicator types, still manage to get into the wrong direction. I've been trading for 2 years and still wait to be profitable. Man, I'll do my best to help you with that, bro. There's a lot of things that goes into making somebody else profitable. First of all, I don't know what your habits are. Like, do you overtrade? Do you revenge trade? Those are the two biggest things that kill traders, right? And their profitability. I'm not even gonna lie. I got into it yesterday, and I destroyed my account, literally, like destroyed it, absolutely wrecked it, because I was for sure, because of the news that we had, the S&P 500 is going to roll over. So even now, I still make old mistakes. But it's okay if you make those mistakes as long as you realize that you made that mistake and you're going to try your best to not do it again. All right? Most of the times we take an entry on a trade and that's it. One, boom, stopped out. Oh, well, even if it goes off in our direction, we don't chase price ever. Never. So we just miss the trade and we wait for the next opportunity. We take Forex trades, options trades, stock trades, crypto trades, now future trades, but I'm getting killed on futures. So I'm probably going to stop now, or at least wait until freaking I get some sort of a sell signal, or just wait for that correction and buy it, because the market is clearly saying something here. I mean, this day was huge. Imagine if I would just been a buyer at support instead of trying to sell resistance. Yeah, so be careful trying to pick tops. I mean, like I said, we all do it occasionally and we get caught for it. And the market reminds you real quick, you don't know anything. You think you know something, but you don't. You don't know nothing. You don't know what price is ever going to do. So we just wait for our high probable areas to get hit. We make sure that at least the main trend on the daily is kind of on our side, and we take those entries. For instance, an entry we took yesterday, USD CAD short, right? USD CAD short. I don't remember where it was. So it had to be in this area right here, right? USD CAD short. Now, if we go look at the daily time frame, this thing isn't exactly bearish. It has went back to being bullish structurally, but we've seen that the dollar was getting creamed, right? Getting absolutely destroyed. So we got short on it. I'm not sure if I'm still in the position or not. I haven't looked, but I will as soon as I get off the live stream. I'll open my broker up, see if I'm still short. Probably should be, because like I said, we took it right around in here. Got resistance is making your resistance levels are getting lower. Here they were going higher, but now this is the London session right here. London session open. What happens? You make this, you make that, but then blah, blah. 8 o'clock comes in, you get a retest of res. That's when we shorted it. So yeah, I mean, looking at today's high right there, there's no reason why I'm not still in that short. So I mean, but most of the time we like to take trades with the trend. I'm short Aussie dollar, for instance, right? This thing was trending lower, and this is a beautiful example, but I'm only going to use one and be done, right? You see this white line right there? That was my short entry. So right here on this bullish day, as price was pushing back up into the moving average, right? This is on the daily time frame. So on the daily, intraday, price was pushing up, and then it ran up, tagged that Heath level or supply. There's a supply level there, so that's why I took the short. And if you look right here, price is moving up. Does it get above the 50? No, it doesn't. Hit the sell button, stop loss, take profits the next day. Boom, boom. Down she goes, and then that. Came all the way down and made a fresh yearly low. So what's the pippage? How many pips is that trade up still to this day? 262 pips. Aussie dollar doesn't move very fast. But still. And as you can see right now, it's still holding. And this is only on the daily. Only on the daily. Where was the 50 at the time of that trade? Getting ready for a potential downside cross. So I'm looking at this day saying, if it stops here and rolls over, the 50 and the 21 will cross. And they did. That just gives me more go ahead for the trade. Now, structurally, here we are. All right. White line. Let me get rid of this one so you don't mistake. This is the trade entry. 67394 minus 1 or 2 pips because of the spread. But this white line is pretty much the entry. Where's the 200? It's above current price at this point, right? That's what I was looking at. Right there. All of the moving averages are scrunched up here. We had a retest of the yellow line, which if you've been following me for any time, you know yellow is the yearly open, the year we're currently in, right? 2023. Had a breakout above, come back in, and broke back down. Retested it, got a breakdown. Came up, made a little bit of noise here, was trading above moving averages, didn't touch it. Then it retested the what? The yearly opening level, which would have been a perfect short opportunity. However, I wouldn't have taken it because at that point, price is above all of your moving averages. All right. Then it gets this move, this move. This move right here is a retest of that supply. This is different, as now we have broken back through all the major moving averages. We have broke through on this RSI. We are coming back up for a retest of the 50. Hit the sell button every single time. Every single time. And now you can play it out. Boom, boom, boom. Look how the moving averages are structurally getting bearish as days go by. Look at this. Big spike. Take out the swing high there for anybody that got short here. Stop them out. That happens to me sometimes, guys. You're going to get stopped out. If you're going to trade, you will get stopped out. That's a guaranteed fact. That's the only thing that is a guaranteed 100% fact in trading. You will get stopped out. You will. It will happen. It's going to happen. And in most cases, it's going to happen many, many times. But this thing is, why would I get out of this trade? Everything is going for me, right? Everything. So here we are today. So I do not have to worry about this trade. This is my entry. But I already took profits because that's a thing. If I take a day trade, which this was because I took it intraday, I always take 70% of the position off at support, whether it's intraday support or daily support, which would have been right there. Just woke up the next morning, we were already down. So I just went ahead, took 70% of the position off. I left 30% of the position on. That 30% of the position is still levered up, right? So this move right here has paid me more than the initial trade. And I'm not risking any of my money. The only thing I'm risking at this point is unrealized P&L, but I've already been paid for that trade. This is all unrealized profit and loss. So if it continues to roll over like USD JPY did, I'll wait till it gets to a significant amount and then I'll cut it in half. And then I'll just leave it alone from there. Because then you'll only have a 15% position size on the original entry taken. And it won't make much unless you get like a really serious, huge down day. Like what happened to the pound when it had a blow off bottom, right? Like unless something like this happens. Like that will make money. It's just up to you to determine when, how much, how often, what profits, when, how, why, right? It's up to you. We are short this, but I believe I may be stopped out. I do not remember where my short entry was. I'm hoping my short entry was here, right there. But yeah, the dollar had that big move to the downside last 3 days. But like I said, it was up for 7 solid weeks. All right, so we're going to go ahead and wrap this thing up. For some reason, I cannot see how long I have been live. All right, an hour and 24, but for some reason, it's not showing me on YouTube. So I'm not even sure if I'm still alive or not. All right, you guys have a fantastic rest of your day. We will, if I feel up to it tomorrow, we will live stream through the NFP print. But, I mean, the way things are going, I probably would expect just more of the same. Or maybe we get a pullback day tomorrow. We'll see what happens. But for the rest of the day, because you still got a long day of trading ahead of you, make sure you guys trade safe. Hang on, let me see something here real quick. All right, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.